Jerome Powell out with some very interesting comments here today, folks, about what the Fed's up to, what their next move is. And so I thought I would go ahead and react to this one in this video here today. Second video I want to react to is this one. It's a buy one, get one free here today, folks. Recession early 2024, a reasonable possibility, says Roger Ferguson. He is the former Federal Reserve Vice Chairman. So I want to hear what he has to say in regards to what the Fed's up to here, where he thinks the economy's going, and all those sorts of things. So appreciate everybody joining me as always. Thanks for being here, folks. We are now at a new all-time high subscribers. Thank you, everybody. Subscribe to the channel. We're on the path to 30,000 subscribers. I appreciate y'all. And let's just jump straight into this.
Other central bankers, Sarah, on a panel today where the headlines were coming. I don't see us getting back to 2% this year or next. That's one that jumped out to me, but there were many.
Thanks, Scott. Yeah, good morning. Look, good afternoon, I should say, from Sintra and to New York. If you were wondering where the Fed is going next after they took a break from hiking after 10 straight hikes 2 weeks ago in June, they decided to take a break, didn't call it a pause, didn't call it a skip. And after 500 basis points of tightening, Chair Powell today made it pretty clear, and I think went a little farther than he did last week in congressional testimony and the week before in his news conference, in suggesting there's more work to do on the inflation fight and tightening policy. Listen.
If you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So the question is, how are they thinking of future rate hikes? The market is pricing in more coming in July. I asked him about...
The reason I want to listen to that again, let's hear if he gives us any tells here.
At the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and
That's a tell. That's a tell right there, folks. Did you catch that? Did you catch that right there? He almost slipped up and said it's not restrictive enough, but then he changed his wording on that. Listen.
Policy is restrictive. It may not be restrictive enough.
He was about to say it's not restrictive enough. Instead, he realizes what he was going to make there a mistake, right? Basically something he didn't really want to say. He said it may not be restrictive enough, but he was about to say it's not restrictive enough. So that's an interesting tell there, folks. And that's sometimes why, you can hear what somebody says, but you just want to listen to it again and say, is he saying something he wants to say or really not, right?
So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So the question is, how are they thinking of future rate hikes? The market is pricing in more coming in July. I asked him about the path from here. Maybe in every other meeting hike.
We've not decided that. So the only thing we decided was not to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way. It may not work out that way, but I wouldn't take, moving at consecutive meetings off the table.
So really what you heard there, Scott, is that he did not, and he volunteered this information, rule out consecutive hikes in July and in September, which is where the market is starting to go. Also didn't really rule out the every other hike, but did make it clear that despite the fact that they paused, they're far from done. He also said, and you mentioned this on the inflation target, he revealed his own forecast in that dot plot, which is he doesn't expect us to get back to 2% target next year, thinks it'll take till 2025. So if you're thinking the Fed's going to be cutting rates, I don't know. He seems to suggest that they're going to have to be restrictive in these high rates for a long time.
Yeah, they'll have to stay up there for a while. Sarah, thank you. Good stuff. We appreciate it very much.
Thank you.
Our Sarah Eisen in Portugal for us.
Okay, so a few factors that I think are important here, okay? So in terms of truflation numbers, for the month of May, it pretty much had us consistently in the threes, right, when it came to truflation. At the very, very, very end of the month, it had us in the twos, but pretty much the whole month we were in the threes. U.S. government numbers came in at 4%, okay, so which means truflation numbers were off anywhere between, let's call it 0.5% to 1%, roughly, okay? Now, this month, for the month of June, truflation has had us pretty much, it has had us at 2% or below, or excuse me, in the twos, right, the entire month, literally the entire month. So what it looks like is the next U.S. government numbers will probably come in at like a 3.1 to 3.3 number, right? Because we know it's not going to come in low like truflation numbers are, even though I trust truflation numbers a lot more than I trust the government numbers. But the government's going to make moves based upon what truflation's at. Or excuse me, the government's going to make moves based upon what their numbers are at, not what truflation's at, right? Now, an important thing to understand about that is when the government numbers come in at 3 something next month, the Fed's going to be in a real pickle to try to raise rates when you got Fed funds rate right now over 5%, and you got a situation where the CPI is going to come in at probably a low 3 number. That's a tough position to kind of take there. Now, Jerome Powell is still talking tough. He's still talking very tough. It hasn't been restrictive nearly long enough. We're going to have to stay restrictive for longer. We're going to have to potentially raise rates more. All these things. He's talking a big game. He's talking tough. Why is he doing that? The reason he's doing that is he can't call victory yet. At the end of the day, the government numbers came in at 4%. 4% is not in the twos, okay? 4% is not 2%. He can't call victory yet. He also doesn't want the market to get too excited. He also doesn't want commodities to start running, okay? And so that's why ultimately at the end of the day, he's still talking tough, and he's going to continue to talk tough until we get comfortably in the twos, month after month after month. This is GSG. This is the commodity index that you pretty much want to track to kind of see commodities over time, right? And I mean, this is down 20+% in the past year or so. And we're in a situation where, commodities continue and remain in a massive, massive downtrend. That's obviously going to be great for getting inflation numbers down. And the more the market potentially runs, or we're seen as going risk on or anything like that, the higher the probability is that commodities can run. And obviously he doesn't want that, or we're going to have another spike of inflation, right? Which would be no bueno. So that's what's going on there. That's why Powell's talking tough, and why he's going to continue to talk tough until we've, officially won the battle when it comes to the government numbers, okay? All right, next one up here. Recession early 2024 is a reasonable possibility. The former Federal Reserve Vice Chairman, let's hear what he has to say.
About the next set of decisions facing the Fed, Roger Ferguson is here, former Vice Chairman of Federal Reserve, former CEO of TIA, and a CNBC contributor. And it's great to see you in person here in Aspen.
Thanks, Andrew. Nice to be with you.
It's nice to be with you. I'm so curious. He says early 2024. What do you think? Is the cash going to run out? Are we going to get into a recession?
Well, you know that I have said for quite a while that I thought a recession was more likely than not, for exactly the reason that he suggested, which is that the Fed is fighting a pretty entrenched inflation right now. And so the possibility of recession, I think, is still there. And early 2024 seems like it's a reasonable possibility.
There's a lot of debate around here about this piece of it, but also whether Jay Powell is going to actually go farther, meaning there's the 2 rate increases that seem to be set on the table. At least that's the conventional wisdom. I think, are you in the camp of there's more coming even beyond that?
I'm certainly in that camp. And the reason is that inflation is really quite intractable. And they've been very clear about getting it down to the 2%. And so I think facing that kind of inflationary pressure forces them to keep going until they are clearly convinced that inflation is on a downward trajectory. And that might take them to 3 rate hikes, possibly more, if the data call for it.
So you think there's 3 rate hikes in this calendar year?
I think there are 3 rate hikes this calendar year, early next. So trying to call the year is really less important than where the terminal rate's going to be. And I think...
Okay, that's a very, very big comment there from Mr. Roger Ferguson here, okay? Huge comment from him, actually, that he believes 3 rate hikes are basically coming likely within the next, let's just call it 9 months, okay? That's basically what he just said there. Intriguing. It's a possibility if inflation spikes huge again, but based upon what we're looking at, and based upon the fact that CPI should likely come in the 3s this upcoming month, and we should be on a trajectory to hit 2s for the government numbers, likely within a month or 2 after that. It gets difficult to try to predict there's going to be 3 more rate hikes unless you have another big spike of inflation. In order to get another massive spike in inflation, you need commodities to go through another big super cycle. Without commodities really going through another big super cycle, you're not going to get... Because remember why inflation spiked huge. It's because commodities went through their biggest boom cycle coming off of Rona, right, into the next basically 18 to 24 months. That's the biggest bull cycle in commodities we've seen probably ever. And certainly since, decades and decades. Like, we had never seen it like that. Insane. You go back and look at commodities from like April 2020 through, let's just call it April 2022. Ridiculous. And then you had supply chains completely messed up at that time, which just caused a bunch more inflation. Plus, you had government pump just a ridiculous amount of money out there to consumers. And that's why we got that crazy inflation. So, now they're so worried about this thing, and it's like you don't really have the ingredients. You don't have the ingredients to have a massive another spike in inflation. You just don't. You don't have the supply chain problems there. You don't have the insane government stimulus now, and everybody gets a stimulus check and all this stuff. And you don't have commodities going through any sort of super cycle. So you don't have any of the ingredients on why we actually had massive inflation. So that's where to make a prediction of 3 rate hikes, in my opinion, is a pretty irresponsible thing to do for a former vice chairman of the Federal Reserve. That's just, understand why we actually had inflation. And then try to figure out, okay, do we have any of those ingredients? No, not even one of those ingredients. So to make that prediction, you have to be convinced that things are going to transpire in the future that we're not getting any signs of right now. Like supply chains are going to break down again, like commodities are going to go insane again. That's tough. Like government's going to send everybody stimulus checks again so they go spend crazy amounts of money. That's tough.
The market is once again perhaps off just a bit by being a little optimistic the Fed's going to be done perhaps before the Fed itself is ready to call all clear.
Here's a somewhat political question. We've been talking about Bidenomics all morning. Heather Boucher was on the broadcast. She was actually here in Aspen just yesterday or the day before. Are you of the view that what's happening in terms of the inflationary story in this country has been a function of the Federal Reserve being, frankly, behind the curve? Or are you of...
The problem with these Fed folks, okay, all these Fed guys and gals, the problem with all of them is they don't know how to forward look at anything. That's what I've come to that conclusion. They don't know how to see anything in the future. They're all data dependent. They all only know how to look at the data they're given and try to make a decision based upon that. They don't know how to forecast at all, not even remotely. That's why you can't judge any of these Fed forecasts. They can't even remotely. They don't even know how to look at a problem like this on a very, it's not a super complicated problem of the ingredients on why we had crazy inflation, right? And do we have any of those ingredients? Like, it's such a damn simple game, but they don't even know how to do that. And the reason these folks don't even know how to do that is because they're so their brains are so into this, like, we got to look at whatever data we have in front of us. Oh, CPI says 4. Oh, core CPI says blah, blah, blah. Oh, PPI says whatever number. And so that's all we have to go off of. And just, what's the trend? What's going on here, right? And what were the ingredients that got you to the last place? And why are certain things happening now? Like, I think these are important subjects, and they just don't know how to forecast. They're the worst at forecasting. These are the same folks that said the Fed might raise 1 time, 2 times in 2022. And instead, the Fed raised the fastest we've ever seen in history on a percentage basis.
Or how much of you are the view that the inflation that we have seen, at least even on the margins, was a function of some of the stimulus and other industrial programs that this administration put forth?
Look, I think it's fair to say when you get this kind of inflationary pressure, recognize 2 things. One, it's global, so the Biden administration is right there. Some that had to do with geopolitics, energy, food, et cetera. And yes, I think in this country, the Fed was a little bit behind as it got into the transitory debate. Right. And certainly the modeling would say the amount of stimulus that was put in was deeper than the hole that was left because of COVID.
How much is that? We were talking about this Greg piece in the Journal this morning. How much do you think of the inflation we saw was a function of what the administration put forth in terms of the stimulus? And is it just because that's part of the political argument that's happening in the country? Because you can look at a lot of the numbers from the administration, which are very good on jobs and the like, and so much of that. But at the same time, if you're not feeling it, which is to say in your pocket in terms of wages, you say to yourself, maybe it isn't working.
Well, look, the answer is unfortunately both are true, right? So I saw earlier in your show there was a discussion about a big factory that's going up in I think New York.
Right.
Clearly a sign, as always expected, this is an investment-driven kind of spending that they're doing, and that's going to take years to play out. So the challenge, I think, for the administration is they are looking at the supply side. They're saying we need more chips here, we need better infrastructure. All of that takes years to unfold.
Right.
It does not feel to the consumer as though their actual real wages are going up because inflation is high. So it's a really tricky dilemma for them. To answer your earlier question, I would argue inflation tends to be, first and foremost, a monetary phenomenon, i.e. the Fed being late.
Right.
I put some of the blame, fair amount of the blame there. Global pressures that got out of hand. And then for me, in third place would be the stimulus package. Right. Not that it was irrelevant.
Hey, that was nice. It was nice to hear this gentleman admit that the Fed screwed up. Jerome Powell, everybody at the Fed screwed up. That was a nice kind of welcome thing there. Thank you for that.
And I would say what they're trying to do is drive short supply, which over the longer term will really pay off. So I think they will have a pretty strong argument to fight that what they're doing is going to make America better over a period of time, not necessarily quarter to quarter.
I have a sort of
Make America better? Man, that sounds like the next slogan for a president right there.
CEO operational question for you, which is the other conversation that's happened here a lot in the past couple of days, is around ESG. And for many, many years, you'd come to a place like the Aspen Ideas Festival, and people would talk about ESG very actively and very positively. And I would say you've seen a real switch in the past year. Even Larry Fink, who was a real pioneer on this very issue, seemed to be, I don't want to say stepping back from it, but trying to take it out of the vernacular, if you will.
So
what do you make of that?
What I make of it is there's real political pressure, right? People have seen what has happened in a number of states, Florida, Texas, others, where, in fact, the governors and the state legislatures are going after those that are investing with an ESG lens. I think it is important to recognize that ESG are different kinds of risk factors. I think investment managers, CEOs, et cetera, should put that on their portfolio of risks that they're analyzing. They may want to step back from it a little bit politically, but I think when it comes to thinking about where you put your money, how you run your company, ESG factors should play in and be really thought about.
Here's the question. So I was talking to a hedge fund manager who was here last night, and he said, in Europe, all of the sovereign wealth funds and others say, what are the ESG factors that you're using? And we have to tell them we're doing this, and this, and this, and this. Then we're here in the U.S. and we're meeting with pension folks in Texas, and they say, "Do you look at ESG?" And we have to pretend as if we don't do that, and we have to say something else. And so we're creating this very unique sort of moment.
Absolutely. And so I think the job is to be as honest as you can. But two, I think for those who are skeptical, you have to simply say to them, it is part of our risk portfolio.
Right.
We want to get paid if we're taking ESG risk. And there's probably some risk that we don't want to take. Now, part of the issue here is also about sort of the energy transition. I also think if you're running a large pension fund or running a company, you have to recognize that hydrocarbons are part of the economy, and you can't completely disconnect from that. So it's a tightrope, but I think recognizing this as this is a risk that you should be paid for is important, because we've seen what happens if poor governance exists. We've seen what happens if companies don't take environmental impact into question.
Yeah, so I don't really have an opinion on kind of the whole ESG talk here at the end. I'll just leave it where I left it in regards to kind of the whole debate on if the Fed's going to keep raising, how many times they're going to raise, and all those sorts of things. Yeah, we have certain ingredients that got us to this place. So those ingredients aren't there moving forward, so we'll see how it all transpires over time. But appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed. If you're looking to apply to join my private group, check out the pinned comment down there. That'll be to fill out an application so we can see if you're a good fit for the private group. And other than that, folks, much love and have a great day.